What's up everybody? Tom here with another video. In today's video, we'll be talking about why you shouldn't be looking at this chart right now in the stock market. We'll also be taking a look at our technical analysis levels for the Sp500, Nasdaq, Bitcoin, Tesla, and more. Coinbase just came on with a direct listing and the hype was real. The question was it completely overpriced? Stay tuned. Okay guys, as we like to do on this channel, let's take a look at the S&P 500 heat map. And guess what? The FANG stocks were down. The first day in some time that we've seen reds across the tech sector. And pretty much no tech sector stock was safe. Everything went down, but you've got to remember how much have they gone up over the last 2 weeks since we started talking about them? An incredible amount. Let's take a look at the indices. That meant that, of course, the Nasdaq was the worst performer for the day. The SPX was actually only just a little bit down. The Dow Jones and then actually the Russell was having a great day at the start and then ended 1% up. So the Russell, really, the smaller cap companies were coming through. Which sectors were doing the best? Well, technology certainly wasn't, neither was consumer discretionary, but energy had a breakout. US oil broke out of our channel, broke out of our range. We spoke about it on the live stream yesterday, and it ended up being one of the best, if not easily the best, for the day. But yesterday was really more about this. It was more about Coinbase, the most valuable US exchange, after the first day of trading. And look, you know, this was ridiculous. It was always going to be. People were jumping in last night in the live stream. Coin, coin, coin. Let's talk about coin. Let's get on coin. That's all we heard all day. And it's because the hype was real. The problem was you already had a very high reference price. Then it opened at $381 per share and went up to $429 per share during the trading session. It's not sustainable considering it literally closed at an 85.8 billion diluted basis. Most people's targets were 100 billion dilution. Now, when you think about the market capitalization that it got to, 429, it went over 100 billion fully diluted. So it easily hit the take profit instantly pretty much for the day. It opened right in there. And it's just not something that's sustainable. What do you guys think about coin? Do you think it's overpriced? Do you think it's fairly priced? Do you think there's growth here? My biggest risk, and always has been the biggest risk for that, is it's going to trade along the way Bitcoin trades and along the way all the rest of the coins are trading and the cycles. So remember, if you believe in the halving cycle, you believe in the concept of Bitcoin having these big moves up and then a big crash near the end of the cycle, then you've got to remember Coinbase will be hurt by that. So just be careful, guys. Valuation is the most important thing. Market capitalization, just like in coins, that's how we trade them. That's how we look at them. Let's now go over to put call ratio here. Put call ratio 1 day is something we're looking at. And good news for bulls in the market, calls were not opened as much as puts yesterday. So because we had a little bit of a down day, put call ratio went up, which means that it's less likely that we're going into a full corrective dip at this point. PCC 0.788 spiked off that kind of just 0.6 reading the other day. I don't think there's anything to be worried about yet in the markets. We're ahead of earnings. We saw the banks come out with earnings. They were pretty good. Some people say, Tom, why did JP Morgan go down and had such a good earnings report? Because the market was heating those stocks up very hard. Remember, everyone started to get into the value stocks only about a month ago, maybe 2-3 weeks ago. We've been looking at those value stocks now since November last year. That's when they were underpriced. Now they're fair priced, or just right meeting the expectations of what the earnings reports are. Let's now get into the dollar index. This is probably the chart that we'll continue to watch here to make sure that things are getting better for the markets. And that is that the dollar index is falling. Remember, if the US dollar is weakening, generally that means something like risk on in the markets, and effectively the markets will go up. This is what's occurring. This is moving down now to the next level of support. Let's take a look at the level of support, guys, together. Here it is, 91.37. Pretty cool zone. Pretty good level of previous resistance, previous supports. It seems to be just going through the participation phase very quickly. I usually expect a little bit of a pull up back, test the 92 and then come down. It doesn't seem to want to do that on its way to 91.37. But what hasn't happened yet is gold breaking through. And this is unusual. I think this is a mixture of people closing gold trades, going into Bitcoin, going into crypto, going into whatever else they're looking at because they're sick and tired of being in this. Gold is not breaking out of this double bottom just yet. It has found the strength. We've obviously seen it starting to coil around this level. Notice how it's hugging the 20 moving average here on the daily. But I need to see gold get above that 1760. We've talked about it so many times. 1760 still remains the key level. The coil is okay, especially if it coils between the 50 and the 20 and then it breaks to the upside, because that's going to be explosive. And we'll talk about that when we look at oil. But yeah, it's just not doing enough, really, considering what the dollar is doing. I would have expected gold to have moved up a little bit more over the last couple of days. Let's go over to silver. Is that doing anything differently? Well, silver's trying to get above this 50 moving average, the exponential on the daily. Once it does so, I think it started its kind of like curve here. We've got the lightning bolt that we always look for, the trough, the peak, the higher trough, and the higher peak. That should then move towards the next level of resistance, which is over here. Let's take a look at what that is, about 2650-ish. And then we move into 28 territory again. So silver's looking okay on the charts. I haven't covered it much because I'm looking at gold really to show us the proper strength, and then silver just to be the byproduct of that trade. But yeah, look, $25 remains kind of like the buy pressure. And as long as it gets through here and closes today, I'd be feeling a lot more confident about my silver longs, because this has been pretty weak for some time. I think there's a lot of things saying, hey, we're ready to go back up, including that US dollar. Bitcoin finding some weakness. We hit the first target. I mean, some people say, oh, we didn't hit 65,000, Tom. Yeah, but we got really damn close. 64.9. We know that the market stops just before these key round numbers. It's bounced down. It's hit the 4-hour 20 moving average. And as long as it continues to hold the 4-hour 20 moving average, this is a strong play in the markets. I would like to see now more bullish intentions here from Bitcoin. I don't want to see it continuously hovering around the 20 moving average. That's not ideal. I'd like to see it hovering in the middle zone or at the top of the resistance. That shows more strength and more momentum. If it starts hovering here, then the problem with the coil down here is all of a sudden it can break through and then go back to 60,000. And we don't really want that. We want it to find further buy pressure right here, right now, ideally. Let's go down the 2-hour, have a look. You'll see what I mean. It's bounced once, very aggressive bounce. It's come down, bounced weaker, but still nice strength. And now this candle is not ideal. Well, let's get some more strength here, guys, on Bitcoin. I don't want to see it all the way through there for the next couple of days. Let's go over to US oil, probably one of the most interesting charts right now. This chart has broken out. It is confirmed above our channel range, exposing now the 66. I told you guys, when you see that coil between the 20 exponential and the 50 and it breaks out like it was yesterday, it's going to bust the side of the channel, and it totally busted it. It went further. Now we probably see a little bit of a pullback back into this zone, back into the top 62 type price, and then hopefully we get that movement up to the 66. Oil is back on as a trade. People are obviously looking at this one, and it's been consolidating for some time. This is a great looking pattern that is certainly going on in the market right now. Tesla fans, wow, our box structure just got hit and then it was all sell after that. 780 to 800 was our zone to be watching, and it looks like people weren't willing to press it anymore. And I think a lot of that's got to do with the aggressive nature of the move. Last time we saw a super aggressive big bull, it went okay the next day. It went a little bit higher, and then it started further selling off. So look, when retail gets into it, it can create a lot of hype and a lot of fervor, but it went to 780 so quickly. I think it's probably due for this pullback after that participation all the way back down to the 720. I think 720 should meet by buying pressure. We had previous resistance over here on the left. We know this was a tough zone to get through. We'll be coming back after what was an explosive move into, of course, earnings, because we've got earnings over here a little bit later. And then we should see further buying pressure back to test the 800. And look, it looks bad on paper, but realistically, it's what we kind of expected. 780 to 800, we expected resistance. What's going to happen? It's going to gravitate down to the next point of support. There's just no noise in between here. Remember, there's no structure between the 720 and the 780 zone. There's just nothing there. So back down, little bit of consolidation, hopefully pull back up ahead of earnings. That's the type of thing that we're looking for on Tesla. Not to be concerned, but yes, if you were in it on a trade and you weren't looking at the 780, I don't know what you were doing, but yeah, you needed to pay some attention. If you're in it for an investment, hey, it's just doing the normal things that they always do. Here's Coinbase. Let's quickly talk about Coin. Yeah, it came in massive. I mean, this thing came in at 380 we were talking about before. It went all the way up to $430.47. I mean, or whatever it was, 429 something. That's an insane number. It's all about that magical $100 billion dilution that was really being looked for. This was the number that I believe many people on Wall Street were aiming for. They got there, and then of course it sold off. This just shows though that hype and anticipation does not lead to good profits. There was a little bit in the morning, but it doesn't lead to good profits. You need to be the person that sees something before it happens. Now, if you invested before it got on the stock market and you were one of those kind of like pre-investors in Coinbase, hey, you made so much money. Congratulations. That would have been amazing. I wish I was there as well. It could not have been better. The hype, the Bitcoin price, I mean, nothing could have been better. But I don't like these types of things because realistically, this is going to trade just in line with the current coin market. If you like coin and you like Coinbase, you could still like things like Binance. You could still like things like just Bitcoin and Ethereum. And this will trade very similarly. In fact, I would say that I actually think the coins will beat Coinbase in terms of percentage return. Now, if the market does crash, what's going to happen to Coinbase? It's going to get really hit on valuation. Go back and have a look at Binance Coin during the 17, 18, 19 crash. Have a look how it interacted with the market. It didn't crash as much as the coins themselves, but it certainly did suffer. So just be careful here, guys. I don't think that is the best looking chart, and I also don't think that's the best looking valuation. Let's go over to the indices. We've got IWM, the Russell 2000 small caps. Good little candle here. As I said, it came back 1% near the close, but still it got above that 223, which is all I was asking for it. Yes, I think this is much stronger now. I think it can move towards the 230 range. So 230 becomes my next target, maybe even 234. They're kind of the levels that we are looking at. If we go over to the US 100, a little bit of a pullback here. Some people are getting concerned. It's not enough to be concerned about. Look at the run we had, guys. It was almost all green, all good for so many days. Very little red pressure. This is the first time we've actually closed to the 14,000. Of course, 14,000 is going to act as some resistance. It's come back, hit this little level of support, and now we'll find out whether it's willing to continue up to its move to the 14.4 during this earnings season. I think only earnings can bring this through now. It's all going to be next week. What's going on with earnings? Which of these companies are beating? If companies in tech start beating everything, then you know that the market's going to anticipate into the earnings results of everything else, and it's going to have that flow-on effect that will come through. If all the stocks start missing, all of a sudden we're at 13.3, and then we find buying pressure here. So there's going to be really two scenarios. It always is. I don't think it's a great time to be investing or great time to be trading here, but yeah, there's two great zones that could be found over the next couple of weeks. We'll go through to the Sp500. This is the community trend line. The community trend line was hit yesterday. We talked about it. Talked about how it hit that 41.50. Little bit of resistance has been found. Nothing yet to show us that there's further weakness. I think the only thing we need to know about the S&P 500 right now is that when it reaches the daily 20 moving average, that would be where we would expect buying, and we'll be looking for lightning bolts on the smaller timeframes such as this. This is what we're really looking for right now. So good luck, guys, out there. Please remember to subscribe. Of course, hit that like button. We'll see you in another video tomorrow, or we'll see you live 1.5 hours before New York Open occurs. I'm very interested to see how coin holds up today. Let's see if it continues to go down to the 250. I feel like this is probably around the price that it will find buying pressure. But that being said, it's very, very highly valued. You've got to be careful there at the fully diluted market cap. And you guys trading coins out there should be very well aware of what fully diluted market cap means. Catch you guys. Bye for now.